Hi, this is Fred Sroka with the Bruce F. Braden School of Tax here at Golden Gate University, and I'm pleased to have two great members of our faculty, Professor Kathleen Wright. Kitty, thank you so much for joining us. Kitty is the director of our state and local tax program, but you wear many other hats, including being on the California Board of Accountancy.
That's true.
And aren't you on the editorial board for State Tax Notes also?
I am on the editorial board, and this is a big issue with that board. So.
It's certainly a large issue. We're also joined by Dan Thompson. Dan is the CEO of Thompson Tax and Associates. But Dan, you're also on our adjunct faculty, and you and I worked together at PwC years ago, right?
Correct.
And in terms of wearing multiple hats, Dan, you kind of do that also with your speeches, don't you?
Speaking of hats, we'll start with the sales tax hat. I started with sales tax 40 years ago when I was still a student at Long Beach State. And then I got into public accounting, and this case came along called Quill, and nobody knew what use tax was. So I invented the use tax hat. And so what the university has offered me in working with Kitty and Dean Fred is we have an awesome 396W sales and use tax class. It is going to be absolutely amped up this year, leading with Wayfair and a great case study and bringing value to your company. We are not going to make you a code head in our class. We're gonna teach you how to learn sales and use tax the right way, now based on Wayfair, and then put you back in your organization and help the company grow. Thank you, Dean Fred. Thank you, Kitty.
Hey, thank you so much. And in this conversation, what I'd love to do would be give the broad outline of where we were, what happened last week, and where we go from here. Kitty, could I ask a favor? Would you mind taking the lead on this? And Dan, maybe if you went play by play, and I'll just
Correct.
stand in the back and watch.
Well, we start with Quill, no doubt about it. And for years, since 1992, the only authority we've had from the U.S. Supreme Court on the whole concept of doing business and Nexus for income tax and sales tax purposes was Quill. And Quill was a office supply company in the Midwest, and they developed a product which was software that would enable their customers to order online. And what I say in class when I get to this part is these facts were in the mid-1980s. So people said, what's the big deal about ordering online through software? And Fred, in the mid-1980s, you were around, I'm sure.
I was a swearer, but yes.
Okay. And number two, were you tweeting?
No, as a matter of fact, I think Wired magazine.
Facebooking.
No, they gave me my first email address in 1989. So before
Well,
that, I
that
don't
was
think I had
ahead
one.
of the curve, actually.
Right.
So what Quill had developed was somewhat innovative and distributed it to customers. Customers in North Dakota and many other places start using the software. And North Dakota Department of Revenue comes in and says, well, now wait a minute, an integral part of your day-to-day operation, ordering, is being done in North Dakota through use of this software. We think that might actually be doing business here in North Dakota. And Quill says, you're crazy. We don't have any people there. We don't have any property there. This is ridiculous. And it ends up in the Supreme Court. Now, Dan, you might not agree with me on this, but when I read Quill, and as we all have read it multiple times, I sort of got the impression that the justices didn't want to say that physical presence was no longer the standard, more because they just didn't understand what the internet was back then.
Yeah, partly there was no internet in '92. We all know that, Kitty. And it's not a matter of disagreeing. The issue in '92, when we were all facing this case, was simply the court had in front of us an earlier decision with National Bellis Hess and an earlier decision with California's National Geographic, where they had held the line that physical presence. And now that we've seen in this case where Kennedy and Thomas have turned, so this case came across simply because Kennedy and Thomas did not hold the line. Had they held the line, they would have never overturned Quill. So
but that's jumping ahead to Wayfair. Yep. But just to wrap up Quill, ultimately the court reaches the decision that since we don't really understand the internet now, at least in 1992, we don't know where it's going, what it's going to develop into. we're going to stick with the physical presence standard. Now, if
Correct.
you really get down into the detail, they did overrule Bellis Hess on the due process standard and
Correct.
Upheld Bellis Hess more or less on the Commerce Clause standard. And that was important too, because then going forward, we knew that there were two different tests for due process and Commerce Clause. And Commerce Clause being, of course, substantial nexus. So then, why don't we go ahead to the next one?
And one quick point also, Kitty, when they looked at Quill in 92, even though there was a mention to software, there was no cloud. There was not nearly the robust vendors that we have today. And so your comment about the 7,500 jurisdictions, there's 52,000 rates in America. I think that really held the line in Quill where they said we've got to have physical presence. That's
the undue administrative burden on Quill to comply with all these different rules, even in 92,
Correct.
was somewhat overwhelming for the justices. So we get physical presence. Then what happened, and I'll be really brief on this because this is, you kind of wonder, well, why Wayfair and why now? I mean, 92, it's been a long time. Why did it take so long? Well, actually, the states were invited back to the Supreme Court in a Colorado decision that goes all the way to the Supreme Court that tangentially, if that's a word, had something to do with Nexus. But the issue before the Supreme Court was not Nexus or doing business, but rather a technical procedural issue. But it related to what Colorado was doing with respect to collection of use tax.
Correct.
Not to get buried in all the detail of that, but in Justice Kennedy's concurring opinion, he says, and he didn't need to say this, but he says, it's time to revisit Quill. Quill is hurting the states. Look at the hoops they're having to jump over to collect sales tax on transactions that are definitely sales of tangible property within the borders of their state. And maybe we got it wrong with Quill, and maybe it's time to look at this again. Well, you don't need much more than that.
Yeah. And also, and Kitty, that's a great observation because on a number of pages in that decision, they used the word modern e-commerce. And in earlier decisions, you never saw the word modern. It was just the law and the facts in front of them. But they somehow now look down on society and they look at Wayfair versus Quill versus Bellis Hess, and they basically use in Bob Dylan's song, "The times have changed." You know, and the winds are blowing.
Yes.
And so that comment about Kennedy is right on. Thank you.
So here comes South Dakota. Now, South Dakota has no income tax, so sales tax is a big deal for them. And they enact this bill, bill number 106, in 2016, immediately almost after the Kennedy invitation. And the bill says, or the statute now reads, if you have more than $100,000 of sales or goods and services which are taxable under the sales tax, or engage in 200 or more separate transactions for delivery of goods and services into the state, then you are going to be doing business here. Clearly, this is economic nexus. Physical presence has just gone out the window, and they draft the committee reports to sort of read like a legal brief they're planning to present to the U.S. Supreme Court. And so they get it through the South Dakota courts very quickly, and it gets struck down. The South Dakota statute gets held to be unconstitutional by the lower South Dakota courts because of Quill, no physical presence. And then they get to the Supreme Court, and the Supreme Court accepts jurisdiction. And everybody thought, as we were getting ready, or the lawyers involved were getting ready for oral argument, that this was going to go in favor of the states because there were 40 some odd states, in fact all the states that have a sales tax, that filed amicus briefs in support of South Dakota and wanting to adopt economic nexus. Now, in the interim, income tax had gone off in its own tangent, and economic nexus had more or less become commonplace. I mean, the rule of law in virtually all the states that have an income tax. And then the litigation starts, and the courts try to argue that, well, sales tax ought to have physical presence as a standard because it's more of an administrative burden than the income tax. But Dan, I said that in multiple seminars, but I never really bought into that.
Because why didn't you buy into it, Kitty?
Why did I not buy into it? Because the administrative burden under the sales tax is paperwork, paper shuffling, which can be largely alleviated by software, whereas the intricacies and complexities of the income tax are not so easily handed off to a software
Right.
program to answer. And so I had always, and I've done both, and I had always, sort of had in my own mind the impression that income tax should have the higher threshold with respect to Nexus than sales tax, but that's not what occurred.
No.
That's not what developed.
And the flip side of that debate, and this is where I get in trouble with all the law firms and the accounting firms. There's one IRC code that covers all 50 states. There's 45 states plus DC and we have thousands and millions of products and services. And so the IRS only has one code to cover the entire United States for that particular item. I have to deal with 46 jurisdictions plus the locals. So I agree the compliance of the return is simple, but a grandma making quilts in Kansas where clothing is exempt in New York at $100 or clothing is exempt in Florida, the rules just all fall apart. And in Wayfair, the Supreme Court does allude to the fact that sales tax is very complicated. Everybody focuses on filing the return, and returns can be filed pretty simple, but leading up to the return is the school of hard knocks. That's my comment.
And I'll be glad to, I would agree. I mean, I put them on an equal footing, income tax and sales tax. But anyway, back to Wayfair. So everyone thinks that the court's going to go along with South Dakota, and then, Dan, we get to the oral argument, the in March, I think it was, and the justices are just vicious with South Dakota.
Vicious. 40 seconds into it. 40
Yeah.
seconds.
Yeah.
She hands the attorneys their head.
Oh, she does. And so after listening to the oral argument, everybody comes away and goes, my gosh, maybe they're not going to overrule Quill. So now we're back to like an even keel. And maybe Quill is going to surface when we get the decision is the law that continued to be the law of the land. So fairly quickly, June, they come out with the decision, Kennedy's decision, and he does get a 5-4 majority, and basically makes it very clear that the physical presence test is overturned.
Gone.
Now, physical presence is not a requirement for substantial nexus. He actually does say that Quill was wrong. He comes down pretty hard on Quill.
He does.
And says that they made a mistake, that it was wrongly decided. Stare decisis should not force the justices to continue the theory of a mistaken decision. So the bottom line then becomes, what does the world of sales tax now look like going forward? Now, I do want to say something about TA 396W, which is our class that is just timed perfectly coming up in the fall. And it is our multi-state sales tax class, because now sales tax is going to have a much more significant multi-state dimension. We're going to look at a minute at what several, not all, but about 20 of the states have done just in the last 2 or 3 weeks in response to Wayfair. And now, with economic nexus as the standard, clients are going to have to file sales tax returns in multiple jurisdictions, and that is the topic of this class in the fall. It could not be more timely.
Thank you, Kitty. Thank you, Dean Fred. It's going to be a new world this semester for everybody. The days of saying we'll get around to our Nexus study, those days are over. What they got to defend, they're in a defense position now. So thanks, Kitty.
Right. So there's no, in terms of hoping for the federales to come and save us, that's gone. So now everywhere we sell, if we're over whatever low threshold might be set, there's exposure to having to collect and remit tax, and there's probably great insulation for the states wanting to charge income tax to remote sellers, right?
Correct.
A very good point.
Very good point.
Once you file anything in a state where, I mean, this comes up in multiple scenarios, but let's just say you send an employee to New York for a month to work. You don't have anything in New York, but you have this employee there for a month, and technically, this is widely abused, you got to start withholding out of their paycheck the income tax for New York for that 1 month, because you're there, you're there for a month, over 14 days. So then you file with the withholding, and that's your contact with New York, and then you start getting letters, well, where's your
Opens
sales
all up.
tax?
Yep.
Where's your income tax? Where's your payroll tax withholding? I mean,
Yeah. That's a good point, Kitty and Dean Fred, because then you get the Secretary of State filings, the income tax, it goes on and on and on. So that's a very good point.
Yeah. Now let's go to the next slide, Fred. And this is more of Justice Kennedy's opinion about, with Wayfair. One other point I want to make, stay right here on this slide, was actually back on the other slide. Another point that Kennedy does make is the following. Fred, do you ever shop on the internet?
My wife does.
Oh, Fred. All right, Dan, do you ever shop on the internet?
No, I never shop on it doesn't matter. I have a resale card. I buy everything without
Well, I'm at a loss here. But the point that Kennedy makes is that actually shopping in a virtual showroom, i.e. over the internet, is actually a lot more informative than going to a bricks and mortar store and actually looking at the item, because you can read all about it and understand more fully exactly what it is that you're buying and the various options that you have. And so he says that is a point towards encouraging people to shop over the internet, which obviously we all do. And that being the case, commerce has changed, and another reason for overruling Quill. But he leaves some questions unanswered. So let's go to the next one, Fred.
And also, Kitty, to that point, there's discussions among the justices about the shopping centers closing, and there's just all this modern discussion that never existed in earlier decisions. So, very good point.
Right. I would, though, point out that we had a well-established body of case law back when Sears Roebuck had their catalog.
Montgomery Ward's and Sears, the two leading ones.
That to the extent that you don't take advantage of the state's roads, their police force, etc., everything gets sent in by common carrier. You aren't using the state's facilities, and that's why you don't charge tax. I would argue that this is a little bit revisionist history, that the internet has changed how we do commerce, and so now we don't really feel that the incidence of tax lies on the fact that you, the seller, are taking advantage of the state, but somehow that the state owns its own customers, and the fact that people are buying in the state creates a problem for you, the seller.
I agree. And you want to know how the courts answered this? I mean, to me, I thought their answer was facetious, but here's the way they answer it. Okay, seller, you don't want to collect our sales tax or pay our income tax, then, and your point is that there's a Supreme Court decision that's got this four-pronged test that you got to meet, and one of them is that whatever amount of tax is charged has to equal the amount of services you're receiving from the state.
Yep.
Yeah, and so the court says, you got customers in our state, if they don't pay you, what are you going to do?
Yep. And Dean Fred, if you look at infomercials at night, you'll see on infomercials, a handful of states do require the consumer to pay tax. New Jersey, California, some of the bigger states. And the reason that theory has held is because the states were able to argue there is no internet if we don't provide police and fire over the telephone and telegraph and internet cables. Now, if you were just on DirecTV, you still cannot get the internet. DirecTV still has to download into an infrastructure. And so that's how the states went after the cable companies, is they said, there's our providing services. We don't maintain those poles and those franchise licenses. There is no internet, there is no cable TV.
And with the customers, of course, it was the court system of the state that you would be using that would be a state service, but obviously much diminished in use than if you had people and property in the state or were using roads and schools and so forth.
Yep.
Understood. I would only point out, I'm a federal guy, and the French tax ministry presented much the same explanation for why they should be able to tax, the EU should be able to tax American tech companies. And the US Treasury fought violently against that, saying you don't own your customers. And they may be coming through the internet to my store, not me going through the internet to their house. So I believe that our federal government has argued the other side of that issue as well.
Well, now let's move on to this second point on this slide, which is Dan. We will momentarily look at what the 20 some odd states that have modified their sales tax rules to conform to more or less South Dakota and the Wayfair decision. But before we get to that, I mean, and when we get there, we will see that the states all have different thresholds and different start dates and so forth. So, Dan, is this an opportunity for Congress to do something with that Marketplace Fairness Act that has been sitting in Congress for 3 or 4 years?
Many years. In fact, the day of the orals, one of the law firms had a webinar, and there's actually been some kind of sales tax bill introduced in Congress almost every year, hard to believe, since Quill. But it goes back 15, 20 years, there's been a bill in Congress. It never makes it out of committee. So the question begs itself now, and I think Dean Fred opened with his comment, is there an opportunity now for Congress to step in? If you notice, Kitty, in Quill, Kennedy called out the Congress and said, you guys and gals fix this. This is your domain. That was in 1992. You notice in this case, the Supreme Court never makes that statement. It's almost where the Supreme Court said, we've had it with you, Congress. This sales and use tax story has been around way too long. And even though we can't write law, we're in charge of interpreting the Commerce Clause. And so here's our new interpretation. So the question begs itself, does this give the Congress enough to wake up and say, we've got to meet and vote and overturn Wayfair? Personally, it's taken us 40 years to get to here. I'm just not sure if we have enough votes in Congress now. Like you said at the beginning, Kitty, 41 states wrote amicus briefs and won. I think there would just be such a lobby effort in the Beltway by the states to just tell Congress, leave this thing alone. We have our new rule, and let's move on. That would be my interpretation.
I agree with the Congress that we currently have and the dissension and whatnot and all the other things they've got on their plate. Let's go to the next one.
Yep.
Okay, now, Dan and Fred both. The big elephants in the room, California and New York. Neither one have done anything about this yet, but I'm sure it's coming. And I'm
not sure, Kitty.
Okay.
But I'm not sure that it's going to come. And a couple of attorneys have coined this in articles this last week. It's called the race to the bottom. And there are very emboldened states like California and New York. Not to be a code head, but California's had this use tax collection regulation and statute 6203 almost since the beginning of sales and use tax in California. 6203 is a forced use tax collection, and actually one of their chief attorneys wrote an opinion once during the Quill days that one touch to California, one trade show, one visit to Disneyland selling a customer is enough in California's mind. And somewhere in the history of that Rev and Tax Code section, it says 6203 will be enforced aggressively until it's found to be unconstitutional. Wayfair just gave them all the constitutional muster they need. So can they append on 6203? And New York has a very similar rule, as do some of the other key states. So this race to the bottom, it's not clear to us today, Kitty. We might know more when class starts up, if legal thinks that they need to expand. But right now, California is full speed ahead without Wayfair, because they felt that any touch to California was sufficient to force the use tax collection. So it's a very good point. And it's evolving, as we know, and that's why we're doing this presentation.
Do you think because these two states, California and New York specifically, are so much bigger than South Dakota, that if they were to enact statutory standards, that they would almost be required to enact higher standards than South Dakota?
And you have a number of unnamed high-tech companies in Silicon Valley and Orange County and San Diego that would basically then be lobbying pretty heavily up there in Sacramento relative to the fact that, we leave this story alone. Our out-of-state companies will now register relative to Wayfair. So we'll keep an eye on that. And I'm sure, Kitty, with your connections with Cal Society, if a bill does get introduced early on, we'll be all over it at the school.
Now, Dan, what do you think this will do for the business landscape of CPA firms and perhaps developing a business segment within their firm that would offer the service, would take this over and offer a service
Correct.
to particularly small to medium-sized retail that are the ones that are most impacted by this?
Right. And to that point, Kitty, as you know, we spoke briefly, my phone's been ringing off the hook with a lot of small to medium-sized accounting firms because most of them have small to medium-sized internet-based clients. And for years, they would write opinions that you needed physical presence. So if you never left California, you don't need to turn on the tax collection. Now, over the course of last week, this week, and certainly next week and beyond, all of those small to medium CPA firms are really going to have to look at their clients very, very hard. And from your side, Kitty, for the pass-through entities, the S-Corps, the LLCs, the partnerships, we all know now it's very difficult to register just for sales and use tax collection. Most of these states' registration forms are requiring you on the pass-through entity side to sign up the income tax side. So I think for small and medium-sized accounting firms, it's the Jobs Act of 2018.
So if I were a student, Dan, in your class, and I were to ask you, and I work for a medium-sized CPA firm, would this be a good career path for me to learn all about the rules in these other states and maybe go back to...
Kitty. And 396 has never been a launching pad into SALT. It's been it rounds out your SALT certificate program, much like property tax and credits and incentives and things of that nature. But I think now going into this new semester, this is going to be an opportunity to get our new students really excited about state and local tax. And maybe they fall in love with sales and use tax, but then we teach them, look, there's property tax, there's income tax, there's all these other state and local taxes that are out there. So I really do think that's a great point, Kitty, that this will really amp them up to at least think in state and local terms in a much different light, because now they can't hide.
Right.
Now they're going to get the notices from the government,
and
they're going to have to answer it.
Sorry, Dan. We see that the very large e-commerce retailers have been collecting and remitting just because they figured, what the heck, it's not worth the fight. There's too many dollars building up if I lose on this. So with Amazon charging and with Amazon already having built the infrastructure, I'd argue that, Kitty, your last point is an important one, which is if you just wind up having to contract that service out, I could understand how that would work. I worry, though, that what's going to happen is this is going to really give an advantage to foreign companies as opposed to domestic companies. Because if a state gets a judgment against a foreign company, those aren't enforced, right, internationally. Whereas in the U.S., they can go after your assets in the other state.
Right.
So isn't this going to damage American companies and actually push them a little bit to go offshore?
Well, then maybe we could sell Donald Trump on it.
Yeah, Kitty, that's an excellent bullet you put in at the bottom. And even though we throw Amazon out there to the audience, and sometimes I'm criticized for using, click-through Nexus is an Amazon theory, the fulfillment by Amazon is a Nexus hook, the marketplace seller piece is Amazon. But be knowledgeable that everybody's now going to get into this. I call it R&R because it's just an old military term. So rather than rest and relaxation going into our 4th of July weekend here, it's actually going to be register and remit. That's really the new game in town. It's R&R, and let's go forward, Kitty. Great point.
Let's go forward. And I want to look at the stage real quickly. Now, Dan, what do you think about this? I mean, this is just a sidelight. We've really covered the crux of Wayfair and the comparison to Quill and where we are now and unanswered questions and where we're going to go. I do want us to look very quickly at what the states have done so far, but there is one state that has a bit of humor associated with it as a small point, and that's New Hampshire, of all places. No sales tax, and they plan to bar collection of the sales tax by another state against a New Hampshire resident.
Yep. And I'm glad you put that in there, Kitty. And very quickly, it's the nomad states, unless you're in Silicon Valley, it's called ODM. So we have 5 states with no sales tax. So nomad is New Hampshire, Oregon, Montana, Alaska, no state but local, and then, of course, Delaware. So New Hampshire, and I heard this story during the course of this journey, Kitty, that Oregon's looking at it as well. So you got to believe that New Hampshire, Oregon, Montana, Alaska, and Delaware, they're all going to have to huddle. If one of these states can legally figure out how to break through that, it'll be a whole different discussion. Correct? I don't know if we're all going to move from one of those 5 states, but
but
it's certainly a scary issue, but we're now seeing states go up against states. That said, the vast majority of the states seem to be saying, a chance for money, sign me up, right?
I think you're exactly right, Fred, that so far there are 20 states, now this is 21 states, sorry, that have enacted an economic nexus model. Several of them have followed the South Dakota model. I assume their logic being, well, we know this works, and this is a relatively low threshold, so let's just go with South Dakota. A couple of them, as you can see on this slide, went a little higher, 250,000. But why don't we go to the next slide?
Yeah, you see Massachusetts in there.
Yeah, here we have Oklahoma, Pennsylvania going as low as $10,000 of in-state sales. And that alone, I think, Dan, raises a question with respect to substantial nexus and whether or not 10,000 will do it. But as we can see, and then, Dan, I'd like to hear what you have, your opinion on this $10,000, but as we can certainly see, the states are, just like with the income tax statutory standards, they're going off in their own direction. They're not necessarily following along behind South Dakota, and there's no reason why legally they should. It's certainly not mandated. So
correct.
That
but my only
things.
thought, Kitty, on that one would be the 10,000 came back from the early days of Streamline, the National Streamline Project. There's 22, 24 states in that, and the threshold was set way back then around that $10,000 number. And I was trying to determine, and you just alluded to that, Kitty. If I was in a state right now and talking to the state legislature and the governor's office, I think I'd be setting the bar at South Dakota, because I think the Supreme Court would not take on another state that has 100,000 and 200 sales, but the Supreme Court might take on a state that drops it down to 10,000 and 100 sales. So I think you're right. I think, and I'm glad you put these together, because a half a dozen states or so are out of session until January 1st. A number of these states had a kicker that if it does pass constitutional muster, it will begin either the first or second quarter after they get a determination from Congress or the U.S. Supreme Court. So I think the next 6 months is going to be telling as to what really sticks on these states and then the other states that you talked about. So that was a good point.
Dan, one last question on that. As you can see here, some of these states have adopted a date. And
correct.
As we speak right now, some of these dates are retroactive. So now that we have Wayfair, would the liability be retroactive?
So we know for sure in Massachusetts at their $500,000 threshold, they are sending notices to clients that are doing $500,000 in sales on the internet in Massachusetts. That's all over the Bay Area, up and down the state of California and beyond. So what we haven't seen, because it just came out June 21st, but our contacts and our key folks in the state are doing everything they can do politically not to go back. But just like with California's 8-year look back, Amazon started collecting tax in September of 2012. Anybody caught in an Amazon FBA environment, California's taken them all the way back. There is no grace. It's just bad news all the way around. So, but California doesn't care. So these other states, my guess, Kitty, will find out as it works its way through the legislative pipeline. If I'm the tax commissioner, remember, a lot of tax commissioners are now set up like California. They're appointed by the governor. They're not elected like we used to be at the Board of Equalization. So I got to believe that the tax commissioners are thinking, let's get these folks signed up and forgive the past. But the caveat that we're going to put in the class, Kitty, is everybody's going to have to research each state specifically because of that look back period. So it's an excellent point. Okay.
Well, I would just say that I want to sign up for your class in the fall. I want to hear more from Dan on all of the background and history and detail of where these rules came from and where they're going.
Good
and,
plug.
and I want to be the state not only income tax, but sales tax expert in my medium-sized firm, because Dan, in many of these firms, there really is no designated person as the
Right.
state and local expert for income tax, sales tax, and now we've got this added dimension to the whole spectrum of laws that need to be considered for your client. So
Right.
Dan is just a wealth of information, and I've enjoyed listening to you just so much that I do want to sign up to take that class.
So one thing we've learned through our years of teaching at GGU, both myself and my other colleagues, is that we get a little bit of feedback from the students after we teach the class. But the one thing that's never said about sales tax land is they audit religiously, and audits are always 3 and 4 years down the road. So we have a number of students that we don't hear anything for 2 years, and then the third year the states start calling them up. So the plug that I'm going to put in for 396 is we'll get you through this new Nexus law of the land. It's going to be pretty straightforward, but we're also going to prepare you for when those audits hit 3 years later.
Wonderful.
Fair enough?
Thank you both. What this does is it says, to the extent that you've got customers outside of your state and you haven't addressed the issue, so you're not a big kid, your world has changed, maybe retroactively, and no matter what, it's so hard to collect from your former customers, you darn well better get street legal in a hurry, because otherwise the entire amount is on your nickel plus the penalties and interest, right?
Yep.
That's right.
And one final comment, and I know it came in late. We have a dozen states that have invented a 1099 reporting for the use tax. It's referred to as, in my day in the 60s, it was you were rat thinked out, but currently it's called you're being narked out. And Kitty mentioned it at the very beginning of our presentation. So even if you think you don't have a particular tax collection responsibility, the states are moving forward under that Colorado case that Kitty articulated, that they are coming after you to get your customer list, and they are sending your customer a bill. So it's a double whammy. You're either going to register and remit, or you're going to be filling out a lot of new state 1099s for your customers. That's my final comment, Kitty and Fred. Thank you.
Thank you, Dan.
Dan, Kitty, thank you both so much. I look forward to seeing this class develop and the law change before our very eyes, right?
That's exactly the way it is.
Thanks, everyone.
Thanks,
Goodbye.
everybody.